there's a lot of talk, a lot of chatter about Bitcoin, about yourself, about Satoshi Nakamoto, so many different things flying around. And of course, then there's all this issue of people wanting to make heaps of money from all the Bitcoin transactions, and why is it going up, why is it coming down, all those sort of things. When you first started, what was your intention for this whole thing?
It's never changed. I mean, if you read the paper, it's very simple. It's micropayments and digital cash. Unfortunately, people have made it into a gambling market like everything else at the moment because they don't believe that it's deregulated or unregulatable, which is completely done.
So where it's at now, is it where you envisioned it to be?
No, where I envision it to be, which will take time still. There's millions of people using it, millions of transactions a second or more, recording information. I mean, personally, if every exchange on earth goes down the tube, it will be a good thing.
I just wanted to ask, as Eileen just said, and you just said, people really value Bitcoin for speculation now.
No, they value BTC. It's a different thing.
Yes, apologies.
But they're not even valuing it, they're just gambling.
Definitely, gambling and
the term value means that there are some use. You don't value something for speculation. You speculate, hoping that you'll make money.
Definitely. I was just wondering, in terms of the difference between BSV and BTC, as Eileen pointed out to us, and I've seen, and you mentioned, BSV can do a lot more transactions per second. So in terms of the fact that they both have the same supply, so what do you think?
Well, supply is not, I mean, people keep going, oh, but it's got a supply. That's irrelevant. You have to have use. Supply and demand curves represent the demand of use, the supply available. So all this market BS is complete crud, is the only way to put it. I mean, this is not markets, this is just a gambling casino. To be a real analysis, what you need to do is look at what use is happening, what demand for use is happening, what future value is expected, how much do you need to have. So for it to be a real market, then what you need is someone using it for cash purposes, using it for saving information, so that there is a market to buy and sell for consumption. And none of that happens.
There are certain countries like El Salvador, and perhaps Argentina, countries that have really had problems with hyperinflation. And they
don't even go there. El Salvador doesn't use Bitcoin. El Salvador has a crime wallet. Their president is basically pretending that it's used to money launder money, real money. So what you'll find is this so-called Presidente type system is probably 1% of the money is actually left. It's not on chain. It's not any. It's just a complete typical. How do I get my money out of the country before I get kicked out scam?
But perhaps Argentina, they do pay for things in Bitcoin now that they're hyperinflated.
They don't.
They don't?
No, they don't. There's a whole lot of marketing BS. If anyone's actually using it at any level, you will see the transactions at 3 transactions a second. That's just complete. You know what?
Not enough to support any activity.
I mean, if a small country like Fiji or something like this was using it properly, then we'd be up in the 20, 30 transactions a second level. So
that is all?
No.
Sorry. But all these crime lords trying to use it, it gives it a bad rep. Is that something that you feel you need to maybe explain a bit more to the public?
Well, no, that just means the regulators have to do their job. This isn't new. Unicitral regulations on e-commerce and digital trading go back to 1996. Practically every country outside of a few like Libya have ratified this. Now, effectively what this means is digital currencies are already covered under law. They're already in the MLD5 money laundering provisions of Europe and Britain. They're already on the FATF provisions of America. The cases, for instance, of Liberty Reserve versus Arthur Budowski that happened a few years ago, the judge basically mentioned that funding, it doesn't matter if you're talking dollars or diamonds or watches, etc. So it's an item, it's funding, it's covered. So people need to actually just stop going, oh, it's decentralized, they can't do anything, which is complete fucked. Right now on BTC, there are 3 nodes controlling 66% of the network, and between 12 and 13 other nodes. Nodes create blocks. It's a very easy way of doing it. These other systems there are not doing anything. They're described in the white paper as IP addresses that attack the system. And they're there to make people think that it's super decentralized when it's not.
And is decentralization a core tenet of BSV, or is it purely about scalability?
But what do you mean by decentralization? I mean, you have to define your term. In computer science, decentralization means that there are distributed systems. But you're making this into a political term when you say decentralization without defining it correctly.
Perhaps, so just as you said, in terms of nodes, just to ensure that no node can control the network, or that the...
Well, no, again, you're going down this the wrong way. Control of the network is whether you can change the protocol. That is the exchanges and the developers. Nodes don't ever do that. Nodes never did that. Bitcoin doesn't vote on rules. All this stuff about nodes vote, no, they don't. The rules were set in stone for a reason, and the only way that they get changed are developers. There's no such thing as code as law. People are behind everything. So when you're talking about this, machines don't update things. There's no consensus method. I mean, the democratic version of all of this is purely exactly the same as you would find, what do you call it, in Stalinist Russia. So you don't vote on protocol. All this stuff that you've heard about SegWit and then, no one voted. It's all a myth. It's all a sort of smoke and mirrors thing. Now, the argument right now is there are between 11 and 12,000 BTC nodes. Now, if you actually analyze this, what you find is that 7,000 of them are owned by 3 people who work for some of the exchanges. Now, does that sound like equal voting or anything like that for a start? Next, out of the 5 million people who use exchanges, trade BTC, etc., if you consider that 11,000 home nodes exist that never create blocks, how is that voting? These people at home don't have to say. So the run up a node doesn't work. The way that you decide on anything in Bitcoin is by implementing proof of work puzzles, and the system doesn't allow for changes in protocol. Now, the comment is, oh, but what about innovation? Well, if you change a protocol, you don't have innovation. There's a reason the internet is where everyone innovates. 1981 is the last time a significant real change happened in TCP. It's been going for over 40 years, basically no changes. Conversely, if you look at IPX, Nobel Network, it changed every year. You don't see IBX anymore, it's dead. Banyan Vine's dead. DECnet, dead. IBM's protocol, dead. CompuServe, dead. See, the distinction is if you have a fixed protocol, then developers can build. This concept of permissionless that people talk about means one thing: you can't change the protocol. If you can change the protocol as a developer, you decide who wins and loses. Someone could have a 10-year project, and some banking applications are 10-year projects. I'm not kidding on that one. Now, imagine you've got this long-term project, and someone changes the protocol even 3 years. On BTC, it's every 3 to 4 weeks right at the moment. But imagine you're there working on this and you have to start from scratch because someone's redesigned it. You don't get innovation.
So people for them to use BSV, you seem to be saying that people really don't understand how the system works. So do you think that it's important for people to have a deeper understanding of it for it to see more widespread usage?
Do you understand the fundamentals of routing, TCP, data exchange? Do you use the internet?
I use the internet, but I understand blockchains just from an abstract perspective, but the rest of what you said, foreign to me.
So the concept that you need to think about is how do we simplify it so that people can get in there and use the system much easier than they do now. There are some people doing this. Shawway, for instance, with Scrypt has been creating compilers that will take Solidity code from Ethereum and allow them to run on Bitcoin. And other people have been doing other compilation efforts as well.
Yes, arguably you don't need to understand how the internet works to use it, and arguably that's why so many people, that's why it seems such good.
Not everything. You need to know some aspects of it. I mean, to do with what you're building, but not everything.
Yes.
Do you have a roadmap of where you'd like to take all of this?
Well, my roadmap is scaling. So, I mean, we've already enabled the opcodes to enable people to build. So what we're looking at now is by the end of the decade, I want to see the capability to have over 1 billion transactions sustained a second. Average of over under 1,000%, and then I don't care. Now people will say, "Oh, but that's spam, that's etc." Now think about it for a moment. What is Facebook? What is Instagram? What is Twitter? I mean, one man's spam is another man's something else. If someone's willing to pay for something, even if it's a very small fraction of a cent, why do you get to dictate what they can and can't do? So we have these developers sitting out there right at the moment going, you can't use the blockchain that way because it'll be spam. So what? Does it really matter to you? Does it matter what someone else is saving? Someone else might have a picture of their cat and they think it's incredibly valuable. You might think it's not, but to them it might be. So why do we sit there judging what other people say?
So is the TPS capability right now, is it capable of achieving your full vision, like your end of the decade vision, or will there be certain tech upgrades, I don't know, in order to achieve that?
There will always be tech upgrades. We're not talking about protocol changes or anything like this. All of that, that's fine. What we are talking about is the capability to have distributed databases that are faster, event handling faster, sharding of the structures, UTXO databases that enable quicker lookup for merchants. So basically, this whole, it's easy, you just increase block size. That's the cop out. It's really difficult. Now, if you've ever thought about what I'm talking, the concepts here, being able to send potentially petabytes worth of information around the world on a daily basis and keep it perfectly synchronized. This is the other side are going, oh, that's just easy, just increasing the block size, boring. It's an incredibly difficult problem. We've spent many years solving a lot of the issues, but synchronizing petabytes of data, as we will have in the future, allowing it so that users can quickly look up information without having to have the whole blockchain, how SPV can work properly, how merchants can be nearly instantly assured within milliseconds over a huge data structure so that we can have potentially billions of users looking up a system at the same time on a global distributed database. That's difficult.
That sounds like a dream, honestly. And I was just wondering, so you're still working on solving the problems that you need to solve to achieve that vision?
We've solved problems that will get us into millions of transactions a second. But then there's a big difference between millions and billions.
Are you waiting for tech upgrades like, smaller transistors, or are you waiting?
No, nothing like that.
Nothing like that.
The hard drives, data, pipes, everything are all there now. They have been for a few years. Now it's building the systems, building the code, teaching people how to use it.
How long is that going to take, you think, to get people to the billions of transactions level?
Well, that will be a lot of use. So what I've been pushing is to have people understand that the block subsidy means that miners should be putting transactions in. It doesn't mean you mine for free. So over time, I will keep trying to push that so that it becomes a loss leader and people start wanting to use it just because it's so cheap. That'll start happening in the new year. And after that, we'll just keep scaling. So, I mean, I hope by the end of the decade we're at the plus level.
I was wondering, in terms of something I've always been confused about. What happens when all of the Bitcoin has been mined? How doesn't the system validate? Sorry, it rewards
fees. I mean, it was always the subsidy reduces to get fees. So I want you to think about this for a moment. Imagine people are paying 1,000% per transaction. Now multiply that by 10 billion transactions sustained per second.
So it requires
divided by say 5 or 6 nodes globally, and think what level of money. Like that 1,000% is still 10 cents. Sorry, 10 million or so dollars a second. And if you start dividing that out, even if there's 10 nodes and you have it equal, $1 million a second. It's a rather big industry. It dwarfs Google, it dwarfs Silicon Valley. Companies would be able to use their profit. I mean, someone doing this in the future would be able to use their profitability to buy Silicon Valley and do as Musk has just done, fire a whole other executives if he wanted to.
And something like this would essentially replace Visa and MasterCard, right? And so do you think that those companies would run
yes and no? I mean, so yes and no. The problem people say is assuming Visa and MasterCard for everything. It will remove the necessity to have the current sort of debit card. That won't be there. You could have a cash-based system again, but people still use credit cards. Bitcoin doesn't give you a loan. Bitcoin doesn't give you a home loan, a car loan, a lease. It doesn't offer advance payments.
So it's adding a different sort of level of functionality to this whole ecosystem, isn't it?
Yeah.
And
so if we think about it, in the past, some people had credit cards, but not everyone needed them so they could interact with banks. So we can go back to the prior model where you can have credit cards if you need it, which is less tempting. It's less likely that you're going to go into debt if you don't have the money sitting there all the time and you're using your own cash. So it changes some of the overall structures.
Would your ultimate billions of transactions environment be sort of going head to head with the likes of the Googles and the Facebook?
Oh, I mean, they'll just be users. The world of the future I see will be not an ad-based internet, but one where payments can be made right down to a fraction of a cent. Back in 2010, I said Bitcoin wasn't ready for very small transactions like microtransactions yet. It would be 5 to 10 years. But we're at that point. We're at the now 12 to 13 year point, and we are capable of doing very, very small microtransactions.
What do you think about the layers built onto BTC Bitcoin, like the Lightning Network? I'm not sure what the TPS of that system is, but what do you think about that in Web5 as well?
Oh, it's okay. The first thing is it's not a layer.
It's not
By
a layer.
definition, a layer is something built inside. So if you go from layer 0 to layer 1, you encapsulate. Okay? So for it to be a layer would require that you're building something in a payment channel or in the transaction itself. So IP encapsulates TCP. Lightning doesn't work that way. So Lightning's not a layer 2 solution. A layer 2 solution, if you think about it, from a layer 1 solution means you strip stuff off, you don't add it. So if you look at TCP, TCP is then encapsulated by IP. So layer 3 to layer 4 is encapsulated. Now, this is a concept not everyone understands, and partly this is a problem that has been there to trick people into believing that it's some sort of scaling solution, etc. Lightning is effectively just a spreadsheet managed by a whole lot of machines, what do you call it, monitoring machines like watches that sit there to keep the network secure, trusted third parties. You don't need BTC for the Lightning Network to work. It can have any asset. It can swap any asset. And its concept is that of a cryptocurrency. It has no logging, no tracing. So the purpose isn't about scaling Bitcoin. That is the myth that they say to cover up what they're really doing, which is creating a system without any tracing. We've now had 1,300 people globally plus go to prison because of Silk Road, because they were daft enough to use Bitcoin and think that they could get away with it. Every time they move any of the money they've earned, the police come knocking and someone else goes to prison. And that will happen for the next 20 years. Someone will be daft enough in 20 years' time to think they can get away with using it, and boom. So what we're going to have to remember is that logging is a good thing. It's there to balance everything. The difference, there were proof of work distributed cryptocurrencies before Bitcoin. Bitcoin, though, is a proof of work distributed digital cash system. The distinction here is cryptocurrencies aim to be anonymous. Bitcoin aims to be private. So there is still a record, there is still a traceability of the cash. It doesn't make it easy. The NSA can't sit there and monitor everything you're doing, but a policeman can go up to you and go, excuse me, where did you get that? Who paid you? And you can try and follow information in a good old-fashioned way.
And so how about Web5 and the decentralized identities as a function of the Bitcoin network? Do you see that as a useful thing being added on or being used?
No, I mean, what is identity? This whole decentralized identity BS. I mean, it's anarchist web of trust stuff. The reality here is you're not going to make up an identity to go to the tax office. What you need is the ability to privately link your real identity with pseudonymous accounts, so that the way that Bitcoin should have worked is an identity that is firewalled from the blockchain provably creates a linked key. So BTC is trying to remove all that. They want anonymity. The whole concept here isn't about decentralization of who you are and all that stuff. I mean, Bitcoin was never released on a cypherpunk mailing list. I mean, all these things like they're going at cypherpunk. It's wrong. It was exactly the opposite. If you read the article to do with the Genesis block, it isn't anti-bank at all. It has nothing to do with anti-banking. The Chancellor was threatening to nationalize the banks in Britain. So if they didn't do what he said, he ran on a rant saying he's going to nationalize it. I mean, if anything, it's an anti-socialist, anti-communist statement with sort of a Randian slash Thatcherian sort of ideal of not wanting banks to be grabbed up by the government.
Just the description that you just gave for how you could load decentralized IDs onto a chain, it sounds a lot like smart contracts. So how do you feel about Ethereum?
All right.
Is it a scam?
Ethereum's a big joke. They won't scale. But smart contracts is a terrible term. They're not new. The first smart contracts date back a long time. So I've got this book here called EDI and the Law that I've been doing stuff with. This book is 1989. Now, electronic data interchange is actually older than that even. Now, in this book, of course, it's talking about electronic interchange and the ability to trade electronically based on conditions. I helped set up systems like this for both the Australian Stock Exchange and what is now Staples 30 years ago. So smart contracts, it's a terrible term. It is and they're not even contracts. Contracts require a human. So you can have a master agreement that binds all your sort of subsequent evidence, but that is then different to the smart contract type thing. Smart contract is really just a marketing term for EDI, except a more efficient version of EDI. You can put conditionals, you can update, you can have if stock gets low, reorder. But when you get past the concept of smart in all of this, then you might actually get somewhere and make something that works. Electronic data interchange has a lot of value and it's been used for a long time, but you have to understand what its limitations are.
But doesn't I know that you don't like the terminology, but the potential usage of smart contracts could solve a lot of the problems that you mentioned before.
No, I'll say actually it will cause more problems. You have to get away from this concept of smart contracts, full stop. What you can do is have a unified database. So rather than having all of the problems of interconnecting between different organizations, that can be synchronized. The ability to simplify purchasing, the ability to monitor freight. But none of this is what people call a smart contract. You can create a whole lot of other things in predicates and things like that. But most of these sort of so-called Ethereum ideas are really just throwing out there to have people pump on something. The ICO concept even, it's not new. In 1994 to 96, there was a big craze on the internet to do with web IPOs. The Simpsons episode even basically had Bart working for one of these guys. And it was a decentralized web-based issue. So it's rehashing the same thing with a slightly different name and saying, but now it's got an added blockchain.
It's difficult to come up with new ideas.
Shouldn't be, but people don't think about it and they don't want to do the work. Now, what the real promise is the same with Bitcoin as digital tokens. It is the ability to have a digital record, a file that provably only has one copy. So what this whole Web 5 thing gets wrong is they put things on DLTs and then link to it, and the hash might be there, but you don't own anything. So if I hand you a file, it should be the same as if I physically hand you something. So that there are methodologies of cryptography to revoke keys and to be able to provably destroy something. So there are ways of setting up files so that I can hand it to you, but your receipt is a provable deletion from my machine. The two of us can never access the same thing at the same time. That's what should be done, but that's hard, and people just want to have a quick buck and get out and not actually do the real work.
Well, there always be people trying to game the system, I guess. So if that's the case, then what's to stop stop it from, how much resistance are you facing in terms of trying to achieve what it is you're trying to push for?
Depends what you consider resistance. I mean, we're not out there pumping the market and relying on it. So, I mean, I'm just going to keep building and scaling. Lots of people will hate that and lots of people fight it. But the reality here is very simple. As long as we're actually focused on our end goal and our task, then it all works out.
Can I go back to we talked before about just using BTC as digital cash, but how could you separate its intrinsic value from the market, and how could you keep its value stable to be used for payments in that sense?
How are commodities stable?
I mean, it's just like the value of the dollar, whatever everyone thinks it's.
No. The dollar's not a commodity. My question to you is, how is a commodity stable?
I guess it's worth as much as anyone's willing to pay for it at that moment in time.
Again, wrong. Sorry, you hear all this pseudo, never studied economics BS, the high school level stuff out there in this market. The reality is very simple. Supply and demand are consumption. It's not trading. It's not any of the market stuff that they say. It's not the bucket shop. The only trade that matters is use. All the other speculation is irrelevant. Use is the only thing. Delivery. So when you're talking about oil, it's not how much people are buying and selling or trying to corner the market that really matters, other than fluctuations in the very short term. It is, what level of use do we have? How many cars are going to be driving? If the price goes up, how does that affect it? So the use in any system that is a commodity, which Bitcoin is based on, really dictates the price in the long term. So if you have millions of users, then, for instance, even if you have free transactions on a blockchain, and we will for a time, that's one of the things I like to mention, then you still need to buy and sell to be able to make a free transaction. You can't make a transaction on a blockchain without owning a token. But if you think about it for a moment, if you want to start using it to record your company data, you have to go and buy this product to write to the blockchain.
You've got to swap it for something else first.
So you have to then give US dollars, pounds, etc., Singapore dollars, and purchase this number of units of commodity that you can then start trading with, that you can write to the blockchain with. And once that starts really kicking in across millions and billions of people, then no matter how many people are out there speculating, trying to corner the market, it won't matter. Because if you think about the Hunt brothers and silver, yes, they pushed the price up because of available silver resources, and then they went bankrupt.
Yeah, they tried to buy all, didn't they?
Yeah. So, I mean, the Hunt brothers managed to have a short-term arbitrage and fluctuation. And at the end of the day, they lost everything.
But so do you see BTC Bitcoin as a problem, because it has, as you said, it's developed into a bit of a religion? Like, what do you think is going to happen to it? Do you think it will collapse? What do you think will happen?
So, do you remember Beanie Babies? So you're old enough to remember them?
Beanie Babies, yes.
So BTC has become digital Beanie Babies. And I mean, if you think about it, people were paying tens of thousands of dollars for these ugly, and they were ugly, stuffed toys. I mean, really, it's a stuffed toy. I mean, oh, but I've got a unique stuffed toy. And guess what? The market just dropped out.
Yeah,
people got bored with it. Yeah, people got bored with it. It wasn't happening the way they wanted, and suddenly, boom, no more. And if there's no intrinsic value, and intrinsic value isn't all these stories that people make up about, oh, I'm going to get rich or anything, because that's a Ponzi. Intrinsic value is consumption. Who consumes the product? If someone's paying miners to write to the blockchain, if someone's using it for a transaction, that's consumption value. It is the use by the end user, the consumer.
Do you think consumption could be inferred from network activity, from network effect?
Not fully, no. Not unless you see actual use with companies and things like this. So then that becomes difficult even to analyze. So you need to then start analyzing the buying and selling habits of corporations, not just people. So we're a long way away from that.
What other activities you have planned with nChain?
Primarily working on scaling Bitcoin. But then we have a lot of white papers to get into patent filings, and eventually more and more of the technology we've been working on to put out there. We're moving more into a commercialization phase in the company now. We've gone through, first of all, my Australian company was in the research side. nChain has been a little bit research, but primarily on the development side. And in the new year, we're going to start on the commercialization side of this, although research and development keep going.
Will there be anything sort of specific to look out for down the line?
A lot of things, but not everything I can talk about. Unfortunately, I'm not like most of the crypto industry. I'm not going to sit there and be promising a whole lot of vaporware that I'm not going to have. But logistics is a big area for me, which would be very interesting for Singapore, because Singapore is effectively a trade center, a port, and being able to track and trace the movement of goods will aid in the development of the economy in that country.
What has a pandemic sort of taught you or opened your eyes to in terms of things that are maybe lacking or could have been implemented, or which could be implemented down the line in case another wave comes on, to not prevent the same thing from happening again?
Unfortunately, I would actually have to say their education in many different ways. Too much polarized thought, but none of this is a blockchain issue. This is educating people and also having journalism opened up again that isn't polarizing, moving away from the Silicon Valley model. So unfortunately, that's not an easy question. Governments in America started the move away from sort of bipartisan reporting. First of all, you had Nixon remove some of the controls because he wanted more openness on his own side, which backfired. And then Reagan removed the rest of them, ironically. And the end is, rather than having to tell both sides of the story and try and report truthfully, now people just cherry pick what they want.
You might be asking, how do you feel about the vaccines, the vaccine rollout, vaccine utility, efficacy in general?
I think it was a global mess with a whole lot of people reacting far too quickly. Too many people running around going, trust the science, too little actual dissemination of what that meant. Too many journalists with no background in science reporting on both sides of the argument. As a scientist, I look at journalistic reviews of papers all the time. And, the level of journalistic sort of reporting that we now have with microbloggers and things like this calling themselves journalists is horrible. Elaine, of course, being a journalist, would know what it's like, but I did work with on contract with News Limited back 25 years ago. And occasionally after I've been in there with the IT, I got to know some of the journalists, and it's very different than it is today. I mean, the industry isn't there to fact check anymore. It isn't about reporting all of the different sides in an argument. It's just how do we get clicks. So.
Right, what's your session on the 1st of November going to be about in Singapore?
Yeah, my session's going to be talking about the scaling and growth of these systems, how we're going to bring it into larger adoption and use, how we're going to force the price of transacting down while scaling up, and a bit more. That'll be good.
This is a bit of a segue, but I just wanted to ask, what do you think about the BRICS currencies? Do you know the Brazil, Russia, India, China, South Africa? They want to back their currencies with gold and heavy metals mixed with some of their own currencies. Like, how do you feel about that plan?
How do you prove reserves? So, I mean, this is always a problem. People sit there going gold-backed currency, and you can't prove that the gold is actually there without physical auditing. So the reason Nixon took everyone off the gold standard was that the French wanted the gold that they supposedly had, and a swap, instead of taking the dollar, they tried to get their gold back. And the American government then said, well, no, we're keeping the gold, and here's some paper. But how do you actually know that it's there? So all through history, actual physical gold has been inflated or cheated. Even when you have a gold bar, people use things like tungsten and other heavy metals to fool people into believing that there's more gold than there is.
This is a problem that is solved by Bitcoin, right? If they just used Bitcoin as a reserve, or you think that's not what it's for?
Well, then before you can use Bitcoin as a reserve, it has to be something valuable as a reserve. And then you're talking, I mean, until you get to 10 billion sustained transactions a second, I wouldn't even consider that it's like silver.
Thanks for your time, Greg.
Have a good
Bye.
day.
You too. Bye-bye.